Good morning, good afternoon, good day. Welcome to my weekend market roundup, 14th November 2020. If you are able to hear me and see my screen, you may please let me know using the live chat panel. I'll continue. I am Sagar Nandi. I used to work in IT. I left work many years ago when I was 46 years. Young, hopefully. I'm swing trading stocks now using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. This is my website sakarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sakarnandi. I regularly share live market and stock analysis on these channels. Thanks, Enamul. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I'll use the systems that I use in my actual trading to look at the market and hopefully find some viable stocks. I will use Q Elite and Q Global for technical analysis. Q Elite runs on TradeStation, Q Global runs on Metastock and Zenith data. I use Q Vital for fundamental analysis, Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. That was the last slide of my presentation. I'll continue with live system and start with a quick look of the global market, starting with the Australian index AXJO. Now I'm using Q Global running on Metastock. Metastock allows me to look at not only at the USA market but at global markets as well. In the last webinar, I discussed that price broke out of the sideways range after a long time. It was overbought, so I was not going to buy at that time. On Friday, it displayed a bearish headwind, possible reversal signal. The candle shape is not bearish. Also, the weekly is not allowing us to take a bearish headwind reversal trade. However, as is the case whenever the bearish headwind comes, we may be cautious about any long position we are holding in Australian market and apply trailing stop to protect profit. It is too far above the recent low to take a long trade, and there is no short trade setup. Japanese market topics index. This also broke out when the Australian market broke out. On Friday, it has a bear release signal. No bearish headwind, but bear release signal. Again, the candle on Friday is not bearish. There is no bearish trade setup and far above the recent low to take a new long trade now. Chinese market CSI 300 index. This also broke out but not so much. Then it pulled back after displaying a bear release signal. Friday's candle shape is again not bearish, not bullish also. The weekly backdrop color is remaining bullish. If CSI 300 goes up next week, gives a cyan flow candle in daily, that will signal a trend following go with flow long trade setup. FTSE index UK market FTSE. This was in a downtrend earlier. Along with Australian and Chinese market, it also broke to the upside, is holding on to the price gain. There is no bear release or bearish headwind signal. If it breaks out of this watermark resistance now, that may give breakout trade setups in individual stocks. It is bullish at present, looking at the daily chart. All these global markets are not in a downtrend anymore, neither are they moving sideways. All are in an uptrend for short-term trading. And the Indian market, Nifty 50 index, was the strongest among the global markets, and it is continuing to be very bullish. The weekly candle is pretty bullish. The daily gained heavily when the Australia market, etc., broke out, and it is holding on to the gain. Again, if it breaks out of this couple of days watermark resistance level, that may signal breakout setup in individual stocks. All these global markets are bullish, and the USA market was bullish. It is bullish now. Is it very bullish? Suppose I ask that question, will you answer in the live chat that it is unambiguously bullish in the USA market and you can go and buy stocks thinking that it is going to go up for sure? It might have felt like that on Friday from certain angles. However, when I look at all the 360 degrees techniques that I use in Q system, it is bullish, but we may be selective in what we are buying, more selective than usual. I will look at the USA market shortly, but before that, let me look at USO, the oil ETF, and then gold, starting with oil ETF. Okay, let me use TradeStation so that I don't have to spend time in aligning the axis, rescaling the axis. Using Q Elite on TradeStation, in the weekly chart, USO oil ETF is continuing to move sideways. Daily is inside a triangle pattern now between trendline resistance and trendline support. Not a place where I'd like to take a trade now. No trade in oil and gold, GLD. In the last webinar, I mentioned that it was moving erratically in a gramophone-like pattern. That is not a place where I like to take a trade. So I will avoid buying in gold, moving up, down, up, down. The highs are going up and the lows are coming down. Right in the middle of the gramophone range, not a place where I like to take directional trades. No trade here. Now let's look at the USA market. Yes, Enamul said very close to all-time high. Yes, that is maybe that might be one concern. That might be a sign of strength, and I will share some more data on it. Let's first look at a series of tweets I shared on Friday, or maybe after market close, maybe just before market close, starting with the list of 10 worst industries. All these are from QEdge. 10 worst industries, and in this case, the one day worst performing industry, all the 10 worst industries also went up. All of them went up. That means everything was up on Friday. All industries. I think QH may have 147 industries for the USA market. All of them were up, and that has not happened for a while. So when you looked at QH on Friday, it was unusually bullish, very bullish. And if you looked at another tweet I shared, the best performing industries on Friday over 1 day period, they went up by significant percentages from 5% to almost 10%. That again showed that at the industry level, the market was very bullish. Let's look at few more charts I shared from QEdge. All the sectors went up, 100% of the 11 sectors, all the industries went up, and massive 92% of all stocks also in S&P 1500 went up. That was very bullish. All the sectors went up on Friday, and we already saw they went up by significant percentage. If we take a longer term view from 1 month to 1 day for the sectors, industries, and stocks, now the picture from 1 day to 1 month is bullish all across. That is also showing that market is very bullish. It has not happened like that for a while. Is this a case where market is so bullish we can buy anything? I already said that is not my view, and let me explain why. But before that, some more charts from QH. Over 1 day, all the sectors are up. This is sector performance over 1 day and 2 day, that is Thursday, Friday. Over 2 day, 10 sectors up, only one down, that is utilities. Overall, it is very bullish. If we take even longer term view, okay, not longer term, this one, over 5 days now, all sectors are up. Over 10 days, all sectors up. Over 1 month, all sectors are up. So at sector industry level, if we use the real-time sector industry rotation analysis tool QH, it is very bullish. However, when I look at the stocks that went up most on Friday, this is a value versus growth analysis. The top 10 stocks over 1 day period, 5 days period, 10 days, and 1 month. For now, let us focus on 1 day period, Friday. The x-axis is earnings growth, yearly period here, and y-axis is valuation score. What went up most, at least among these top 10 stocks, they are the junk stocks. That is bottom left, bottom center. They are neither undervalued nor high growth. Junk stocks went up more. So Friday could be pretty much junk of the bottom rally day. However, there may be some good buying opportunities. We'll look into that. High growth stocks are not in this list. Neither are there so many over 5 days, nor over 10 days, nor over 1 month. If we think of high growth stocks as annual earnings growth, then they are absent in this graph over all the 4 periods, and I have been looking at it, sharing these pictures for a number of days. High growth stocks are not going up so much as undervalued stocks, or maybe even junk stocks. Undervalued stocks, we understand they can go up suddenly by large percentages because they tend to be lower price stocks. Why junk stocks went up in recent periods? Not only over 1 day, over 5 days as well, 10 days as well, and over 1 month also. That may be because the stocks that were very negatively affected by the COVID-19 crisis, some of them are recovering. And as I mentioned, there may be some good buying opportunities there. I will look at that. This is showing that we may be selective, not buy all high growth stocks only. Now, let's look at another picture that I share in every market roundup, that is week to week sector comparison. And this time I am sharing the week to week comparison for 3 weeks. In all the charts, red bars are the current week, green bars are previous week. This is from 2 weeks ago. So that time the market turned down from bullish to bearish. That is 2 weeks ago. Then 1 week ago, from bearish, it turned to bullish. And this week, from green bullish, it became even more bullish. So earlier it was flip-flopping. bullish to bearish, then bearish to bullish. However, in the current week, from bullish, it became even more bullish. Sometimes you may get used to looking at this chart. So this picture is showing that it is not flip-flopping in the current week. It became even stronger. So if we look at Q edge in this way, sector level, industry level, across all the periods, it is very bullish. However, when I look at the market ETFs or futures, let's look at the USA market now, and let's use Q elite on trade station for the market ETFs. If I look at SPY, S&P 500 ETF, if we look at Friday's candle, the market sector industry stocks were so bullish, but Friday's candle is not that bullish candle in terms of size. It is bullish, it has a bullish flow color also, but in terms of the length of the hollow body, it is not that much. And if we look at the volume, it is not at all reflecting the bullishness that was there in the sector industry level. And the weekly candle didn't end in a bullish shape. It ended in an indecisive shape, and that too closed below the watermark resistance. So it couldn't close above the previous peak in the weekly chart. That is not at all showing the bullishness that was visible from all the sector industry charts so far. If I look at DIA, again Friday's candle was bullish, but the flow color didn't turn cyan, and it is not such a long hollow candle body, not as much as I would expect looking at 100% sectors being up, even 100% industries being up. Volume very low, even lower than Thursday. That doesn't show bullishness. Weekly shape is indecisive. The positive thing is that it bounced from the trendline resistance, which may now act as support. That is the positive part. Otherwise, in terms of weekly shape, in terms of daily shape, considering the huge move in sector industries and the volume, Friday was not that bullish. If I look at Russell 2000 ETF, IWM, again, the hollow body is there, but not as big as I would expect. The weekly shape, not that bullish. Daily volume on Friday, not reflecting the bullishness, even lower than Thursday's volume. And Nasdaq ETF, QQQ, the body is not at all bullish. If you think about the size of the hollow body is very small, it nicely went up from the trendline support. Trendline supports, the memory supports work very well, but the body is not that bullish. See the volume, usually low volume, not showing the bullishness. The weekly candle, not at all bullish, not bearish, also indecisive, and it closed below the trendline resistance. Not at all bullish, what one would expect looking at the sector industry level. That is one concern. It is not bearish, but Friday's bullishness at sector industries stock level is not reflected in the overall market. If we look at the market breadth information, market internals, that is looking at Nasdaq Composite and NYSE Composite Index, and the three internal studies, new high low, advanced decline, up down volume, everything is now up. That is bullish. That is bullish. However, the Nasdaq Composite Index ended with an indecisive shape and closed below the trend line resistance. That is not so bullish. NYSE went up and closed with a bullish shape. However, if I change the NYSE composite index to daily interval, it closed right at the memory resistance. Friday's candle was bullish, but not what one would expect looking at the sector industry stock strength. One would expect for the candle to close somewhere above even this watermark resistance. That didn't happen. The fact that it closed below the weekly memory resistance for Nasdaq and daily memory resistance for NYSE is also a concern. It's not bearish, but it is not reflecting the bullishness one would expect from the sector industry stock move. That is keeping my, if you say euphoria content. I'm bullish but not so bullish because of this contradiction between what we see from Q edge and what we see from market ETFs from market breadth. And even if we look at market futures, because of the contradiction, let me spend a few more moments on that. This is S&P 500 futures, E-mini futures, ES. The weekly is not bullish. The daily volume is very low. Daily candle shape is bullish, not as much as I would expect. Weekly closed below the watermark resistance. And let's look at one more futures, let's say NQ, Nasdaq 100 E-mini futures. The weekly shape not at all bullish, closed below trendline resistance. Friday's candle shape not at all bullish. Yes, it went up from trendline support but closed below trendline resistance. Not at all bullish. I would expect it to break out decisively. If I just looked at Q edge and somebody asked me how you are expecting NQ to move, I would expect that, but that didn't happen. That is keeping my bullishness muted, not so much as I would think just by looking at sector industry and stock analysis from Q edge. Having said that, are we able to find some trades? Yes, we can, and we can find that from QFinder bottom up analysis, and QFinder, which shows the balance between bears and bulls using multiple Q signals. The weekly interval is saying it is bullish, and these are actual trade signals. Finally, we trade based on unambiguous trade signals if you are using Q techniques, and when the Q finder is bullish, I would prefer to take trades in the bullish direction, because here even the reversals are not bearish, it is mixed. And other than reversals, if we look at all signals, very bullish 90%, strength signals 96% bullish, trend continuation signals 92% bullish. Only reversal signals are not so bullish, but it is balanced. That is the weekly picture. Friday the market went up. If we looked at Q edge, it went up a lot, and I would expect the same thing from Q finder daily. That is Friday's picture. 92% of all signals bullish, 94% of strength signals, 94% of trend continuation signals, and even 70% of reversal signals are bullish. When the finder pictures are like this, I am reluctant to take short trades. I have some short positions, but very few compared to the long positions. And I know even if I have to take loss on those short-term short trades, no problem. I think I will make up much more than that loss from the long trades. So if I am looking at the overall picture, I am still bullish. And let me now look at a few stocks. Let me first start with MAXR. This is a trade idea that I shared in the traders forum. sagarnandi.com. I shared it as a box trade setup. Let me have a look at the trade setup so that you may see how the chart looked like when I first shared the trade. Not only how it is looking now, but how it looked like when I shared the trade. I shared it 4 days ago. As usual, the Q360 snapshots are attached. The aerospace and defense industry was turning up. It's a turnaround candidate. From relative weakness, it was transitioning to relative strength. That was the industry level. In terms of fundamentals, it was a value stock, undervalued stock with excellent earnings growth in the last quarter, 250% earnings growth. When I shared it on that day, it was up by more than 5%. The industry in itself was also strong. It had a short squeeze potential. So fundamentally and in terms of industry, we could buy the stock. And this is what the chart looked like at that time. It came to watermark support in daily, created a false downside breakout, went up with very strong bullish candle. The traffic light color turned neutral yellow. It gave a bull release signal along with bullish pressure, bullish U-turn, very high activity. In the weekly also, it created a false downside breakout and the weekly candle shape was bullish. So I shared it as a possible box setup or double bottom reversal kind of trade setup at that time. This is one of the reversal setups that we have that allows us to catch stocks with very narrow stop loss. And that is one thing that is constant in all the Q trade setups. The stop has to be narrow. In this case, I might consider the next trend line resistance as my initial profit target, and that would have given me greater than 1 reward risk ratio. That is one thing that is constant in all my trades. I try to keep reward risk ratio at least 1, around 1 or at least 1. In any case, I tend to book profit once the risk distance is covered, at least partial profit, or I keep an eye on the stock. Once I have covered the risk distance, I don't want it to turn into loss. So anyway, this is what I shared 4 days ago. And if I look at MAXR now, you may say it has gone up steadily after that. If it hits the trend line resistance, the initial profit target will be hit, or if it goes even little bit more, maybe to the yellow direction line little bit above that, the risk distance may be covered. This was a box setup that I shared and it has done well. Now, one thing to remember, it is in a downtrend with lower high, lower low. We took a box setup doesn't mean that the trend has changed, because the box setup is a reversal setup. So if it comes to the trend line resistance, there will not be any logical reason to hold on to the trend unless it can decisively break out of the trend line resistance in one day. If it is stopping at or near the trend line resistance, the logical thing will be to close the trade and then wait for the next trade, because we put high level of significance to the trend line resistance and also to the trend line support. In this case, the resistance will be the place we'd like to book profit. That was one example of box setup and how it is working. Let's look at Netflix. Why I mentioned Netflix is because out of the mega cap stocks, and I tweeted about Netflix relative weakness through Twitter. I might have posted a topic on forum also. This was the only mega cap stock I could see at that time that was reversing from that trend line resistance. So I was looking for a short setup. And while it was reversing from near the trendline resistance in daily, the weekly was bearish flow color. So what I was looking for, I was looking for the daily to turn magenta. That would have given me a trend following go with flow short trade setup. And its relative performance was tilting down for quite a long time. So it was relatively weak. To be able to take a short trade, I would need the fundamental to be weak. And some of the mega caps are in fact very strong. Enamul mentioned the market is at or near all-time high. Some of the mega caps are also near their all-time highs or at very high price level, but they are not fundamentally weak. Whereas Netflix, in terms of Q fundamentals, let's get the scorecard. While it is retrieving the scorecard, let me check the industry using Q Edge. The industry improved on Friday. If we had looked at it on Thursday, it was weak. So I was thinking of taking a short trade when I first shared it on Twitter and or forum. That was based on Thursday's candle, and that time the industry was weak. On Friday it turned up again, but on Thursday it was weak. And in terms of fundamentals, still retrieving data. In terms of fundamentals, I think I saw it was not so strong. Did I share it on the forum? Let's search it. Two days ago. I shared this 2 days ago on Thursday, and as I mentioned, when I shared the post, the industry was pretty weak. Unambiguously, you could decide that. On Friday it turned around, but I wouldn't know that. On Thursday, when I analyzed it, the industry was weak and it was overvalued stock. This stock was down. Earnings growth is positive, but less than from the previous quarter. In any case, in Q Technique, I am looking for either valuation to be in my favor or earnings growth. So in this case, it was overvalued and it had a trendline resistance in daily. That was my basis for looking for a short trade in Netflix. As I mentioned in Twitter and our forum, because Thursday's candle didn't turn magenta, I didn't take any short trade. Or if I had taken any short trade, I closed it as a day trade on Thursday. I had no reason to hold on to it because the go with flow short setup didn't confirm. And I was looking at it on Friday again because on Friday it could turn bearish in daily. That would also give me a go with flow short setup. So I was keeping an eye on the stock. Firstly on Thursday, where I could have taken a early range breakout short trade and I could close it with a profit. At the end of the day, there was no reason to hold on to it. And on Friday, again, I could initiate a short trade using early range breakout technique. Again, I could close it with partial profit. There would not be any reason to hold on to the trade overnight. Why? Because in the daily, the candle had a lower tail long enough to not confirm the go with flow short setup. Go with flow short setup, go with flow setup, like any of the other Q trade setups, they're based on unambiguous checklists. And if you applied the checklist, the candle shape would not meet the necessary conditions for taking a short trade on Friday. That is how I traded Netflix. I did make some profit and I closed it. I didn't hold on to it overnight. So MAXR that I shared earlier, that was an example of box sideways market or double bottom long trade. Netflix was an attempted trend following go with flow short trade that didn't confirm, so I didn't hold on to it. Now SPWR. This is an interesting stock. On Friday, there was a market roundup on Metastock, and I attended that, and they asked, do you have any stock to look at? And I shared SPWR, and the view on the stock was bullish, not at all bearish. And why I wanted to share it is to explain that whether one is bullish or bearish is also a function of one's trading style and holding period. The gentleman in the webinar, I think his analysis was pretty good, not only on this stock, on many other stocks. I followed on earlier sessions also. There are many techniques of trading. So when he looked at the stock, whether it is weekly or daily or even longer term, 1 month, it was bullish, and nobody can argue with that. It is going up, higher high, higher low in the daily. Weekly is going up very strong. Now the question is, for me at least, not whether the stock is going up strongly from lower left to upper right. The question for me, my short-term trading style is, if I wanted to take a trade today, what will I do? It can be one of three things: either buy or short or do nothing. In this case, what is it? And though that gentleman's view was more bullish than bearish, my view for this stock is not bullish. And again, the difference is not that one person is more accurate than the others. My view is that the difference is one's trading style and holding period. Both can be right and both can make money so long as we are disciplined with our own techniques. Now, the gentleman, of course, didn't look at industry and fundamentals, and that is where Q technique differ in one way. I will look at the fundamentals and industry. Let me do that now. Let's look at SPWR. That will probably also explain how I am able to trade sometimes a little bit ahead of others. Though little bit ahead, my success rate is still remaining, I think, a little bit better than many others for short-term trading. I am not talking about long-term trading, short-term trading. The reason is I am looking at real-time data and looking at it holistically. When I looked at SunPower's fundamentals, not only is it overvalued, it is also having negative earnings growth. If we look at last 3 quarters, from 75% positive growth, it became neutral to minus 157% earnings growth. So nobody will think earnings growth is great for this stock. Even the last yearly period, earnings growth is negative. Even revenue growth for the last 2 quarters, negative. So if we look at growth for short-term trading purpose, we will not categorize it as a growth stock for short-term again, and it's overvalued. Now let's look at its industry. Semiconductors, if we think of it as a semiconductor, but we shouldn't, it's a renewable energy stock. Semiconductors are down, relatively speaking, and if I look at renewable energy equipment, it's also down. Not only down, on Friday its score is the second worst possible score over 2 days, third worst possible, over 5 days the worst possible score, over 10-day worst possible, over 1 month worst possible. When I see an industry is as weak as this, whatever be the chart looking from lower left to upper right, I am not going to buy the stock today. I could have bought it when it was at the lower left corner. Of course I would have bought it, but not today. Not looking at this industry rotation that I can see from QH. Fundamentally, it's also pretty weak. Also, if I looked at the chart, let me use Q Global for many reasons. Q Global is my slight favorite over Q Elite. One reason is I can process thousands of stocks in Q Global that I cannot in Q Elite, not in real time. Let's look at SPWR using weekly daily. I posted, why don't I look at it? I posted the forum post on this stock. I might have already marked it there. SPWR. Yes. I showed the renewable energy industry was very weak. Fundamentally, it was very weak. And if we look at the charts, the weekly displayed the bearish headwind possible reversal signal. In daily, it created a false upside breakout. If I look back, there was a bear release signal here. It didn't come as red because the traffic light candle color was green. That was one of the incremental enhancements in the latest release. Also, when the bear release came, it created a reversal candle at price extreme high. And since that reversal candle, that is this candle, price couldn't go up. It created a series of bearish or indecisive candles. On Friday, when the market went up a lot, it ended with a doji candle. Thursday, bearish candle. Wednesday, mixed to maybe slightly bearish candle. The day before that, bearish candle. The day before that opened higher, but that was the reversal candle, very bearish candle. So if I look at the chart like this, there is no reason to feel bullish about the stock. It may change tomorrow, but right now there is no reason to be bullish in the stock. I was keeping an eye on this stock and I am looking for a short trade. I might have taken a short trade using vertical and I don't mind adding to that if the stock continues to go down. And how did I take the vertical trade? That would be using the Q fine tune chart. Yesterday I was watching at SPWR using fine tune chart. The early range high, early range low formed, then price went up, and precisely at this time I tweeted about it that when you are seeing a stock going up and pausing at early range high with a series of indecisive shape candles saying that it is struggling to go up, even if the market was very bullish, we are not going to buy the stock. In any case, because I did the industry analysis, I did the fundamental analysis, I was not going to buy it anyway. But even if those were bullish, looking at this kind of candles in the fine-tune chart, I was not going to buy, not when it was at early range high. In any case, I was looking for a short setup, and following Q technique, that short setup would come on this bar. That was the best time to short. Best doesn't mean it was guaranteed profitable, but it was the best time to short in terms of risk management and taking a high probability trade. Why? Because firstly it had a bearish shape candle, then it had a bearish traffic light color candle. Thirdly, it could reverse down and close below the early range high. Fourthly, just before that, price went up with very high activity and then it reversed. This is the reversal dot. So that was a sign that the bulls on the intraday time frame might be exhausted and now it was the time to take a short trade. So if you initiated a put options trade, monthly options, when price came somewhere here, it had more than 10% profit. So how I traded this is, in fact, I took a short call vertical and I took a naked put. And when price came here, the short call vertical had some profit, the naked put also had some profit, and I saw it was not falling down anymore. It couldn't go below previous day's close. And the market was very bullish. So instead of keeping the naked put, I converted it into a long put vertical. So I have a short call vertical with positive time decay, positive theta as they say, and I have a long put vertical with negative theta. Overall, I have no theta, not much volatility risk. I just have a delta bearish trend. This is one of the short positions I am holding. Again, if it stops out, no issue. The long positions that I have will make up much more than that. So how am I confident about that? I'm confident about that, not about a particular trade, but on aggregate. I'm buying stocks where industry is bullish, fundamentals are great, technically I have a low risk buy point. I'm shorting when only when the industry is weak, like in this case, fundamentals poor, like in this case, and technically I have a low risk short point, and I am further using fine-tuned chart to take even lower risk trades. I didn't have to do that. I could use only weekly, daily at a glance chart, but I have fine-tuned chart available. I don't have a full-time job, so I'm able to use the fine-tuned chart as well. That is why I'm quite confident. Even if this stock stops out, I'll have much more profit from the long positions than this losing position in aggregate. What kind of stocks I have long position on? Did I share about this? I like to look at the stocks that I shared, because I shared about them mostly before knowing the result, and we could see how the charts were. Okay, Mesa, I didn't share it. I was talking to another Q trader a while ago, and I mentioned this stock to him, and I think it will be worth looking at the stock MESA. The weekly has a bullish flow. This week, if you look carefully, it gapped up and then it continued to go up. Do you remember we saw the market ETFs, market futures had very low volume, unusually low volume on Friday. However, see, this weekly volume is extremely high. On Friday also very high volume. Throughout the week it had high volume, all the 5 days of the 5 days. When we see that, and when we see after this gap up move on Monday, price is going up, we have to say that all these volumes are bullish volume. Even for 2 days the color may be red, but the fact that after the gap up move on Monday, price continued to move up, those were intraday moves or up down move. It's normal, the price will not just go up in straight line, but clearly there is much more bullish volume, much more than we can see from the market ETFs. This is an airline stock. I can see it from here, that may benefit from the vaccine. It was at a very low price level, at price extreme low. And if we see carefully, the last reversal candle we had, that was a bullish reversal. There is no bearish reversal. And then it went out of price extreme low. Friday also had bullish flow, bullish U-turn. Friday's flow color turned cyan, bullish, and that you can see now from the incremental enhanced release. Now we have the flow indicator as a new band indicator in QLE. So the technically it was looking bullish to me, and then I looked at its fundamentals. Let's look at that using QFinder. And you will see that I am buying stocks probably a little bit ahead of others, shorting stocks also probably a little bit ahead of others, but still keeping my success rate pretty good. Again, the secret, if anything, is not a secret. I am using real-time data, extremely reliable data analysis, and combining industry strength, market strength, fundamental strength, technical strength, or weakness together. See the fundamentals, great valuation, great valuation. I didn't expect high earnings growth because it's an airline stock heavily affected by COVID-19. Has a short squeeze potential, went up by more than 8% yesterday. If we look at the entire period, 10 day, 5 day, 2 day, 1 day, it is steadily going up. 8%, 6%, 26%, 37%. Yesterday, the industry was very strong. 100% of the 14 stocks went up. I mentioned the market seemed very bullish when you look at QH sector industry stock moves. When you look at the market ETFs, market futures, market breadth, that bullishness is tempered. That is what I thought of saying, that we are bullish. I am bullish at least, but selective bullish. And I am bullish in a stock like this where 100% of the peer stocks are going up. And that may be reflected in the industry strength in QH. Of course, all industries went up yesterday. We have to look at the relative strength, and relative strength is very strong. It's 143 out of 147. I just look at the color. If we look at the percentage, it will be high also, 6%. So that is high, certainly. For relative strength, I look at the scorecard. So that is a stock that I have a long position in, MESA. Now, when I was talking to the trader earlier, I found a stock, AT&T. Yes, I am looking at the question. Enamul has a question on Q Elite, how to change the template, chart template, to see the memory trend line, historical ones. That is, if you are using hotkeys, you may press Control Shift M. M for memory, Control Shift M. M for memory. I clicked it on the daily chart. That will show the historical memory trend lines. This is a daily chart, and this setting is, if I go back to the usual daily entry chart, that has the memory trend lines here. That is coming from an indicator. If I go to studies, edit studies, there is a Q memory that has an input, delete truncated memory or not. Here it is deleting truncated memory. This is probably the most technical I have ever been in any Q webinar, because Q system is supposed to be intuitive. We don't look into it. But if you wanted to know delete truncated memory, if I make it false, close it, it will show me the historical memories. But the easier answer is just use Control Shift M to change the template, and you will be able to see the memory trend lines that are historical. And I told you how to set it up for any chart, whether be it Q fine tune or be it Q backdrop. Okay, back to usual Q daily entry chart. You are welcome. So MESA, coming back to MESA. So MESA is one stock, that's fine. And then AT&T we are talking about. Let me think about how I found AT&T. I would have found it in one of two ways. One might be when I was discussing with the two gentlemen, I might have run a fundamental analysis on mid-price stocks in the USA market. That is one of my workflows. In real time, sometimes I run a fundamental analysis first on my stock universe. So this has currently 1410 stocks. So with a single click of a button, I am able to calculate the fundamental scorecard of these stocks in real time. Let it finish the analysis. It has finished it. Now I'm going to look at the stocks and look for the stocks that went up most. However, some of them have poor valuation, poor earnings growth. So I don't want to buy. I want to buy stocks that are having either both great valuation, great earnings growth in the last quarter, or at least one of them, either great valuation or great earnings growth in the last quarter. And let me search for AT&T. AT&T. Let's look at the data. Yes, it is undervalued stock. And it didn't go up much. Why I wanted to bring this up is to explain one thing. This has great valuation. It didn't go up so much considering the other stocks that might have gone up by 5, 10, even 20% yesterday on Friday. And when I was discussing with the gentleman, I mentioned one thing by looking at the industry score that I was probably not going to buy it because I looked at the industry score, but I want to correct myself. Yesterday was a very bullish day. 100% of the industries went up. We can see that from here also. 100% of the industries went up. So it is normal that some industry will be weaker than others. And of course, it is a fact. It is one of the weakest yesterday. But that weakest industry also went up by 0.75%. It's not something negligible during normal course of trading when the industry is going up by 0.75%. So though looking at the relative score of the industry, I may be reluctant to buy it. I have to make it clear that that will not be entirely appropriate. We may look at the industry percentage also and put things in context. What context? This is a telecom stock and is with great valuation, and also the context is it has high dividend, more than 7%, almost 7.2% dividend yield. And now let's look at the stock. By the way, it's only 10%, less than 11% above 52-week low. So it's no harm looking at a stock like that. Let's look at it using technical charts now. Q Global, AT&T, and the chart is looking very, very nice actually. In weekly, after a long time, it decisively broke out of the trend line resistance. This trend line resistances and supports as well work pretty well. 1 week ago, it had an indecisive doji candle with a bull release signal. It in fact reversed from this watermark support, very long term watermark support coming from far away, creating a false downside breakout. It's a high close doji in the weekly chart, you may say. Weekly is very bullish. In daily, it gapped up on Monday and holding on to that gain, very nicely holding on to the gain. Friday's candle shape is bullish, pays a nice dividend, undervalued stock. So I wouldn't mind buying AT&T. If you look at this chart, and now let me replace this with Mesa, the one where I already have a long position, airline stock. There is some similarity between them. Mesa is also breaking out from trendline resistance in weekly. Mesa also gapped up on Monday and very nicely holding on to the gain. Now Mesa has certain things in favor of it. Its relative performance is very strong, has bullish pressure, and before the breakout, Mesa was moving sideways, not in a downtrend. So that may be considered as bullish because it was already sideways moving, meaning it was under accumulation, you may say. Whereas AT&T was under selling. Now you may say after selling it broke out, maybe it is good time to buy. That is also a valid logic. So both are buy setups in my view. And as I showed, AT&T has an excellent dividend yield, 7%. So we could buy AT&T as well. Again, selectively buying, but there are plenty of buying opportunities. Now I think I remember how I found AT&T. Did I remember when I was discussing with these people? It is also a stock that is turning up from price extreme low. Not sure I found it now, but it is also a buy setup, so I wanted to share it. Now coals. Coles is also an interesting stock. It's also breaking out of trendline resistance in weekly. Weekly has very high volume. Weekly has an indecisive shape. Perfect doji, you may say. If it goes up next week, there is a very high likelihood it will break out of the next trendline resistance also in the weekly. And that resistance is actually quite far from Friday's price level. If I apply the go with flow trend following long trade setup, on Friday it gave me a trade setup, long setup. So I have a long position in coal. Other than the required conditions for go with flow trend following long trade setup, it also had additional confirmation, that is bullish pressure, bullish U-turn. How is its fundamentals? Let's check it out. Because I wouldn't buy if the fundamentals and industry were not aligned, or I have to justify to myself why I am still buying. Let's look at its industry strength. Very strong, relatively speaking also. This is the difference between stocks like Mesa, which is similar to this strong industry cases, and then stocks like AT&T. I said at AT&T also I may buy, but AT&T's industry is relatively not so strong. So suppose I am going to buy only two stocks and I have Mesa, I have Coles, KSS, and I have AT&T. I'm going to not trade AT&T, but I choose KSS and Mesa because objectively they have industry relatively much stronger. And if I look at percentage change, remember AT&T's industry went up by 0.75%, not negligible, but department stores, Kohl's industry went up by 7.5, 10 times stronger. Why will I not buy into that strong industry? The answer is no reason not to buy. So if I look at coal stock, we already got fundamentals. Again, at a lower price level, so I expect it to be undervalued. It is undervalued. Not great earnings growth that is expected, has a short squeeze potential. So coals, I have a long position. Sometimes when I trade a stock like coal on a day like this Friday, instead of buying the stock, I short the put and long the call. And sometimes instead of buying at the money, I may buying or shorting at the money, I may short the put at the trend line support. So let's say 22 whole number, short put at 22, let's say 10 lots, and then I may buy long call at the next watermark resistance. If you look at the distances, my put will give me more credit than the call debit. So I may have 10 short put, 10 long call taken as a credit spread combo, you may say. It's not exactly synthetic stock long, that would be using at the money options, but it's a combo, but equivalent to, you can say, long stock position using out of the money options. What is my plan? Even if it goes up little bit more or moves around here, I'll have profit from the long put options. As soon as I have 50%, sorry, I should, from the short put options, as soon as I have 50% profit on the short put options, I close entire short put and I will close half of the long call, and then onwards the rest of the long calls will be free. My money would be back by that time, and I may just leave it there and book profit if it goes up. If it goes down, no problem, I have no loss in the trade. I might have traded KSS in that way. That means I have short put, long call, maybe using out of the money options if I remember correctly. Let me share one more stock, and again these are to illustrate selectively, but I am bullish. AGNC. I have a long position in this stock, and why I bought it, if you looked at 1, 2, 3, 4, 5, 6, 7 weekly candles prior to this week's candles, all of those were indecisive shape candles, and all of them were held by the weekly trendline support. The memory supports were pretty well. Resistances also work well, supports also work well. So I was not going to buy until it could give me a bullish shape candle, because prior 7, 1, 2, 3, 4, 7 weeks they were holding to the memory support, but the shapes were indecisive. Now I have a very bullish shape candle with high volume, and not only that, it could regain the yellow direction line, and in daily it broke out with extreme high volume. When did I enter it? Enamul asked about the historical memory trend lines. On this day, now we can see the historical memory trend line resistance. On this day, it tried to break out of the trend line resistance but turned down and closed lower. And next day, it very decisively broke out. So I might have identified it as a breakout trade either using QFinder on Metastock or Q Elite on TradeStation somewhere here, and I took a long position. After for 2 days it didn't move up. On Friday it moved up again. So I have a long position in AGNC, but of course before taking the breakout trade, I for sure I would have clicked a few more mouse buttons to check its fundamentals. And again, I think you will see the difference between this and AT&T. I can still buy AT&T. I'll not buy SPWR for sure, but I would buy Mesa, I would buy Coles, I would buy AGNC, and I have long position here. Here the valuation is medium. However, it has earnings growth. I'm looking for only one of them. Over 1 day to 10 days, is steadily going up. Yesterday, the industry was very strong, and the dividend 9.6% dividend, very high dividend. We saw excellent memory support in the weekly, and let's look at industry relative score. We know in itself the industry was very strong yesterday. Relative score is also good. It's not the best like in airline industry we saw, or not as good as Coles industry department stores. However, yesterday was very bullish day, so we have to look at the industry percentage. The industry went up by 3%, not negligible at all, so I am able to buy it, and the stock pays huge dividend. In fact, I have some fixed deposits in banks. If they are in INR, but if I convert it to USW, the interest rate yearly period maybe not even 1%. So if I think of that, I am happy to buy AGNC, maybe break some of my fixed deposit. The fixed deposit allows me not to worry about my trading profit, but that is also a thing I have in mind. If I have money in fixed deposit with so low interest rate, when I have high dividend paying stocks in industry that is going up, also fundamentally it has something going for it, in this case earnings growth, I am happy to put some money in that stock. So I have a position in that also. That is how I am bullish. I have some bearish positions, but overall more bullish. We are beyond the 1 hour time period. Let's end today's session here. I am bullish on the market. There is some reason for that bullishness to be tempered. As I mentioned, one is the market breadth is not that great in terms of price being. When I say market breadth, I mean the composite indices, Nasdaq and NYSE, they stopped right at trendline resistance. And the Friday's market was very bullish overall. However, the Friday's market ETF candles were not that bullish and volume was very low. So my bullishness is tempered. However, when I do either top down or bottom up or fundamental first analysis, there are plenty of buy setups in the right stocks, and I shared some of them. That is all that I wanted to share in today's session. Thanks a lot for attending. I look forward to seeing you in my next session. That will be on Wednesday, 8 a.m. Eastern Standard Time on the same YouTube live channel. Thanks a lot. Keep safe, trade profitably, and see you again soon. Bye bye.